Hello traders and welcome to another video review. Today is Thursday, November 17th, 2022. Let's find out what is going on the Forex calendar today. As you can see, we had important data released overnight. Those data were in form of the employment change from Australia. And as you can see, the actual reading of 32,000 beats the expectations of 15,000, and it's way better than the previous reading of minus 3.8 thousand. So pretty decent data from the Australia. We will definitely take a look at the Australian dollar today. The CPI data from the Eurozone are scheduled for release at 12 p.m. and it looks like the CPI is expected to grow again. The forecast is 10.7%, while the previous reading was 9.9%. Please notice the fact that the higher the consumer price index goes, the ECB is more likely to hike the interest rates. Data from the UK scheduled for release at 2:30 are in the form of the autumn forecast statement, so that's kind of an interesting bunch of data to keep an eye on. And then during the New York session we got important data as well. From the US scheduled for release at 3:30 we got building permits, Philadelphia Fed manufacturing index and initial jobless claims. So it looks like kind of a busy trading session is ahead of us in the US, and we will talk a little bit more about the US dollar indices today. So let's find out what's going on the market. We will definitely take a look at the Australian dollar, and then we will focus on different markets. The Australian dollar for our chart is looking very nice. If we switch to the daily, we can see the context on the current up move. From the highs of the beginning of the April 2022, we got this trend line here, and this trend line is being tested right now. Of course, in order to hit the next target for bulls, the market must break strongly above the trend line and hit the level of 6,837. This is a 161% Fibonacci extension of the recent wave up. And as you can see, we got the supply zone located between 6,831, 6,854. In order to hit this level, we need to break above the trend line. And of course, the bulls are trying to break above this level. However, as you can see, now the situation is a little bit more complex, because we got a breakout and a big upper shadow. So there is a supply coming into the markets already. This is very interesting candle, first red candle in 4 days. It looks like the more supply is coming here around the trend line zone, 6,750, let's say. And if today's candle is red, then we have the confirmation that the trend line resistance has been protected, and the market might be going lower towards 6,684 or 6,580. So please keep an eye on the Australian dollar today. What's going on the SP500? Let's start the session. Let's start the review of the American indices. So what do we have here is a very nice breakout above the short-term trend line. Big candle up, breaking above 3,921, which is the upper boundary of the technical resistance. Then the local high is made at 4,042. However, this high is made as a pin bar, and it looks something like a shooting starish, let's say. It's not a textbook example, however it looks very, very promising. Today, as you can see, we're already down, so we are printing the red candle, and if there's a confirmation that this is the local top, then of course we will test the 3,921 again, 3,839 again, and the next target is 3,807. So the bounce, 3 waves only, The potential targets for the free wave bounce here are right now on this chart. 161% is way too much. Let's say 0.61 broken. 1 is here. So right now the market has been stacked above 61% of the extension and 100% of the extension. So it's in the middle of nowhere. So 61% is not enough, 100% is too much. We will see what the market participants will do here. One more thing that might be handy in the current situation is the Fibonacci retracement, how much we have retraced. And as you can see, we retraced more than 50%. Let me just switch to the 61%, and this zone here between 61% of the retracement and 61% of the extension looks like a target zone for this up move. However, as you can see on that candle, this up move had been violated anyway. So please keep an eye on the current situation on the S&P 500 index. Very, very interesting situation. Possible movement to the downside. The upside is kind of a limited, but this candle has not, this breakout has not been tested neither on this level, or even not on this level. So maybe bears will do something about it. Let me just take a look at the Dow Jones. We didn't actually look at this market for quite some time. Let me just zoom out. And if you can see this this chart, you can clearly see that there is interesting breakout on the Dow Jones index. Like if we put our trend line like this, there is a breakout. Even if we put the trend line like this, there is a breakout as well. This is a very big V-shaped reversal being made on this market. So this is the technical resistance. Let me just make it a little bit more thicker and red. This is the technical resistance. This is of course the next one, and there goes of course there goes another one. So this is the swing high. There you go. This is the swing high technical resistance, and there is one more here. So very nice V-shaped reversal. We trace almost all of this move to the downside. The local low was made around 28,653, so that's technical support. And to be honest with you, if I just I would like to put the moving average on this chart, and what I want to do is to have a 100 days moving average and 200 days moving average. There you go. We are trading above these two moving averages right now on Dow Jones. So is that a clue that the down market is done, that the downtrend is done, that the bulls have been expanding the upside territory? This comes with the 34,293 points breakout to the upside. So if we break above this level, which is the key level right now, because then if we break, the market will make a new local high. Local high, swing high, or local high, because it's still under the 54,293 level. So anyway, if this level is violated, then we can clearly see the upside movement accelerating. So are we inside the channel? It doesn't make sense to put the channel here. Let's leave it like that. What I want to show you here is that this is very aggressive dynamic movement to the upside, okay? And this movement to the upside is roughly inside of this channel, acceleration channel. Very nice breakout above the trend line. Let me adjust this. There you go. Might be something like that. Very nice breakout above the trend line. Those are very interesting pin bars here that might not be coincidental. That they are here. The bears might be coming here to of course make some pressure on bulls. So where is the technical support? The technical support is located here. For example, this is intraday technical support, so it will be just like that. There is the support, there is some kind of a support, and the other support is located around here. So we got the support levels. We are trading above the trend line, inside of the channel, above 200 days moving average, 100 days moving average. It looks like this might be the first wave to the upside if we break above 34,293. So in that situation, there is one more market we have to take a look at. We will take a look at DAX, because we didn't look at this market for quite some time, and this situation on DAX and German market is kind of a similar, don't you think? Because what do we have here actually is again the technical support. We are trading above the technical support. If we skip to the trend line, you can see clearly that this trend line has been violated already a long time ago. Okay, so that's the situation, and we are of course approaching the technical resistances. So one is here around 14,686, so that's the technical resistance, and the other one is just above it around 14,915. So inside of this zone, this is the key zone to the upside. So this is how the DAX looks like right now. If we take a look at the moving averages, we are way above 100. We are way above 200 moving average, above the trend line, approaching of course the supply zone and the three very important technical levels, technical resistance levels. So let me just make some kind of a scenario for this market. Where is the arrow? There you go. What we need to do here is to come off from the extremely overbought market conditions, consolidate, test this breakout, yeah, of this swing high 14,000. This is the level, and then push to the upside. In that situation, this whole movement up will be very bullish and might indicate the end of the downtrend. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.